So have you ever heard a story where a massive company tries to crush its biggest rival but ends up paying them $1 billion and making them way, way stronger? I know, it sounds completely made up, like something from a business horror story, but it's exactly what happened between the software giant Adobe and the design upstart Figma. Let's get into how this absolutely wild story went down.
And yeah, that really is the question here, isn't it? How does a company that has a virtual monopoly that has dominated for decades with billions and billions of dollars, how do they manage to accidentally build their most dangerous competitor?
Well, the answer is just perfect. It's so ironic. It all started when Adobe decided to do what it has always done best, just buy the competition and make them disappear. Only this time, the whole plan blew up in their face in a way that nobody, and I mean nobody, saw coming.
Okay, so to really understand why this failed so badly, we first have to understand the main character in this story, the absolute empire that is Adobe. For years, they've been this untouchable force in the creative world.
I mean, seriously, think about it. The Hollywood movies you watch, the magazines you read, pretty much every website you visit, chances are Adobe software was the engine behind it. They built this colossal empire. And along with it, they developed a very specific playbook for how to deal with anyone who dared to challenge them. And this is where it gets really interesting. To see that playbook in action, we have to rewind the clock and talk about a piece of software that a lot of you might not even remember, called Freehand. Now, this is not just some random side story. This is the literal blueprint for what they tried and failed to do to Figma.
Just look at this timeline. It is a masterclass in corporate patience, and honestly, it's a little terrifying. In '94, regulators actually blocked Adobe from buying Freehand's owner, and even banned them from trying again for 10 whole years. But Adobe, they just waited. A decade goes by, the ban expires, and boom, they buy Freehand's new owner. And by 2007, Freehand was dead. They didn't beat it in the marketplace, they just bought it and choked it out.
And this had a real impact, you know? Users were absolutely furious. A lot of people, like the designer in this quote, thought Freehand was actually the better product. But Adobe's strategy was never about letting the best product win. It was about making sure their product was the only one left standing. So, with the competition out of the picture, what happened? Adobe's business practices got way more aggressive. They moved to a subscription model, which was fine, but they trapped users with things like this, a massive cancellation fee. Basically, if you wanted to leave your annual plan early, you had to pay them 50% of whatever was left on your contract. It was a really effective way to keep you locked in, whether you like their products or not. But into this whole environment of frustration and total market control, a new player started to emerge. And this, of course, is where Figma finally enters the story. And Figma was basically the anti-Adobe in every way you can imagine. Adobe's software was this huge, heavy thing you had to download and install. Figma, it just ran in your web browser. Adobe locked you into expensive plans with those crazy fees. Figma, it had this super generous free version that designers absolutely fell in love with. For a lot of people, it was a total breath of fresh air.
So naturally, Adobe started to notice Figma's explosive growth. And being Adobe, they reached right for that dusty old playbook. It was time to go shopping and eliminate the competition.
Okay, brace yourself for this number. $20 billion. To give you some context, that was almost double what Figma was even valued at on the private market. This wasn't just a purchase, it was a statement. Adobe was willing to pay a gigantic premium just to get its biggest new rival off the chessboard. It was the biggest deal they had ever done. And for the entire design world, it just felt like a nightmare. You could almost hear the collective groan. This was the Freehand story all over again. Another cool, innovative tool that people loved was about to get swallowed by the giant. Everybody assumed it was game over.
But then, just when it seemed like all hope was lost, the whole thing started to fall apart. And this is really where the story takes a hard right turn into unbelievable territory.
See, this time was different. The whole world was watching. And regulators, especially in the UK and the EU, they stepped in and put their foot down. They basically argued that if Adobe bought its #1 rival, it would completely kill innovation for years to come. And that pressure just kept building and building. So after a full year of fighting with regulators and getting nowhere, Adobe finally gave up. They walked away from the deal. Figma was saved. But wait, because the truly insane part of this whole thing was hiding in the fine print of the deal they signed. $1 billion. It was called a reverse breakup fee. It's a penalty that was baked into the contract, and it said that if Adobe was the one to back out of the deal because of regulators, they would be forced to pay Figma $1 billion in cash, with absolutely no strings attached. And this chart just perfectly shows how ridiculous this whole situation was. Look at this. Before the deal, Figma had raised a grand total of $333 million from investors over its entire lifetime. In one single payment, its biggest competitor just handed them 3 times that amount, for free. So think about it. Adobe didn't just fail to kill its rival, it accidentally gave them a billion-dollar war chest. And you better believe Figma put that money to use right away.
With all that new cash, Figma went on the attack. They poured that $1 billion straight back into the company and launched an entire suite of new products. All of a sudden, they weren't just a design tool anymore. They were expanding to directly challenge Adobe's other core products. They were coming for the whole kingdom.
And the results, they were just incredible. Take a look at these numbers. Their revenue jumped by nearly 50% in just 1 year. And unlike a lot of flashy tech startups, Figma actually became profitable, clearing $45 million in just the first quarter of 2025. Meanwhile, back at the Empire, the giant was starting to stumble. Adobe got hit with a big lawsuit from the FTC over those very same cancellation fees we talked about earlier. Their big AI push was kind of fizzling out, and their stock price was just flat. The momentum had completely and totally shifted. And then came the final victory lap. In mid-2025, Figma went public, and by the end of its very first day of trading, it was valued at a jaw-dropping $68 billion. That's more than 3 times what Adobe tried to buy it for. It was the biggest IPO of the year, a massive success story, funded, poetically, by its greatest enemy.
So let's zoom out for a second. What does this whole wild saga really tell us? What's the big lesson here for the rest of the industry, and for all of us who use these products?
When you boil it all down, Adobe's old playbook completely backfired. Their attempt to swallow their biggest threat didn't lead to a monopoly. It did the exact opposite. It created a monster, a competitor that is now richer, stronger, and more dangerous to them than ever before, all thanks to their own billion-dollar check. And that leaves us with one last really important question to think about. This whole story is just such a powerful reminder that when these giant companies are actually forced to compete fairly, when they have to win by making better products instead of just buying up their rivals, the real winners, in the end, are us, the customers, the creators, the innovators. The entire industry wins.